Well, Wall Street closing slightly higher today. The Dow back above 14,000 points, nearing its all-time high yet again. To date, the Dow about 1% away from its all-time closing record of 14,164. Go, baby, go, baby, go. I want to retire. My next guest says it can happen sooner than you think. Joining me now, Wayne Kaufman, Chief Market Analyst for John Thomas Financial. Okay, I want to talk to you about Japan because I saw a headline today that just blew me away. So the economic policy minister there today said, well, probably yesterday, says he wants the Nikkei to jump 17% by March 31st, 2013. Got to go up. Want it to go up, want it to go up 17%. How does he propose doing that?
Well, he's doing the same policies that we're doing over here, quantitative easing and that type of thing, purchasing assets. And if it does go up there, that'll be a 53% increase from October. So that's pretty amazing.
So the government, just like here, is going to sponsor a stock market rise. And you've got to think that every central banker throughout the world is going to do the same thing. Should we just go out and buy all these stock indexes? Is that the answer for individual investors?
Actually, yes. And I've been bullish on the market for a long time because of the global synchronized program of buying assets by central banks.
That's my question.
That's a good question. It's starting to get a little extended, just like us. But if they say don't fight the Fed.
They say don't fight the Fed.
And there's a reason for that.
But
so don't fight the Bank of.
How long can this go on?
Well, it can go on for a long time until it cracks. You know, Ernest Hemingway.
Until it cracks and crashes, and we're all crying in our beer once again.
Ernest Hemingway had a great expression. He said that a man goes broke slowly, then all at once, and that's what happens in a crisis. It builds and builds, and then nobody notices. And then boom, which was the housing crisis. So a similar thing. But they can make the markets go up. Don't fight the Fed. Don't fight the Bank of Japan.
Wow. Okay. So that's what we're relying on here. That's what we got, folks. All we got are the central bankers. Nothing else works anymore. And I'm not sure the central bankers work all that well either. I mean, yeah, our stock market's been up, but what about our economy? That hasn't shown.
I have this discussion with a lot of people that the market is not the economy, and there's still a lot of problems with the economy. But, you know, my job is to guide investors in what they should do. And right now, there's no sellers. We do have a slowly improving economy. It's too slow, but it is improving. Valuations are very good. Even maybe it's being goosed by the Fed, but valuations are good.
Let me give you some positive news here. Okay, I'm making fun of the Fed and I'm making fun of the Bank of Japan, but in reality, we have a positive earnings season going on. 71% of U.S. companies, public companies, have reported the majority are beating expectations. That's good news. We'd like to see that. That's really what should be pushing this market up, even though it's getting a little help from other folks.
Well, and that is because based on the good earnings, and it's a terrific earnings season, much better than people forecast way back in December when we were all worried about about the debt ceiling and the fiscal cliff. So earnings are going up, and that is helping, and that's why valuations are still very good.
Let's talk about your favorite sectors. You like financials, consumer, healthcare?
Yeah, and you know, last year I said I liked financials a lot, and a lot of people said, no, they're not going to repeat 2 years in a row as a top sector, and they are. And these stocks can continue going higher because they have tremendous earnings power, and a lot of them own portfolios of assets that are getting pushed up in the market. So it's a good place to be.
Well, okay, Wayne. We're going to hold you to that.
Okay.
And we're going to watch those sectors and see if they do what you said. Thanks for coming on. It's great to talk to you.
Very well.
Really appreciate your time. We'll be right back after.